Good afternoon, everybody. This is Thomas Wood with Microquant. We're going to be looking at the trade of the day, or the few trades of the day, the top three from today's live trading room. We actually had another up day, which is great. The top three trades were in the dollar index, copper, and the 30-year treasury bond. The first one is a 30-year treasury bond, which we went long yesterday in the trading room and left it on overnight. This was a swing trade. The reason we were going long is off of the support from September 17th, 2012. We got in literally just a couple ticks off the bottom. Today we actually closed that trade right up here and moderately overvalued at around plus 700 per contract. Depending on where your fill was, I know some people got out around plus 600 per contract and some people got out around plus 700 per contract. But either way, it turned out to be a very, very good trade and we got out just in time. The market did spike a little bit higher before rolling over and heading south, so very satisfied with that trade. The next trade we had was in copper. This ended up being a great trade. We put this on basically right in the beginning of the trading room in the morning, right around 8 a.m. The reason we went long, we were trading with the regression, so we were just doing simple trend following trade. MQ regression is one of the microquant indicators, and what it does is green means an uptrend and red means a downtrend. So if it's green, we're looking for an entry to buy, to go long. Here, the reason we got in where we did down here in undervalued is because we had a bullish divergence. And what I mean by that is the prices dipped down here and then they dipped down again even lower. But if you look at our momentum histogram, the momentum had strengthened a little bit. So we had a higher low. And as soon as the momentum ticked up to the upside on this bar right here, so I guess it's one arrow over, we actually bought and then we covered at significantly overvalued. Some people covered at moderately overvalued, which I did myself, but some people in the trading room held it a little bit longer, covered all the way up and significantly overvalued, and then a couple actually got out at the top off of a bearish divergence on a 5-minute chart. And they locked in gains anywhere from $300 to $800 per contract there. That was another very good trade that we had where we were literally risking about $100 per contract with our stop just below the low of the previous bar. This is actually the first trade of the day. So we were looking at the dollar index. We saw our MQ regression again heading lower. So we said, okay, what we'll try to do is short as soon as we see our momentum roll over from an overvalued price point. We ended up having shorts here. As soon as this momentum histogram started ticking lower, we held that trade all the way through to down around close to the lows, not these absolute lows that it just reached now, but here near the bottom. Ended up taking about $1,200 per contract out of that. Again, only risking about $100 to $150 per contract with our stop loss. Really great trading days in the trading room. I look forward to seeing everybody there again tomorrow morning, and I will send out the new video tomorrow on which trades ended up being the best trades of the day.